I'm halfway through my 20s and I've made a ton of money mistakes and will probably make plenty more in the future. I wanted to share 10 financial mistakes with you, so hopefully you don't have to go through the same thing. Even with all the mistakes I've done, I don't regret a single one of them. I just view it as the price to learn.
I'd rather make mistakes than nothing at all.
I'm FamiLei. I teach personal finance and investing on this channel. Join the FamiLei by subscribing and let's dive in. When I first started my career in the tech industry, I came across my first paycheck and was ecstatic because I saw the money amount and it was the most I've ever made in my entire life. But little did I know there were a ton of deductions already in place before I received my money. This is Social Security, taxes, federal, state, insurance, and a bunch of other things. And one thing I didn't realize that was on there that I was being charged for was life insurance. Now, I'm not gonna say that life insurance is bad. It can actually be very beneficial to have term life insurance if you have dependents or children. But as I am a young bachelor with no kids, there is absolutely no reason to have life insurance because in the event of my death, I don't have to support anyone. And although the life insurance was a pretty small amount every single paycheck, over the span of 2 years, it all added up to several $100s, which I could have saved if I didn't pay for this life insurance I didn't really need or even want. So my suggestion is to make sure you look at your paycheck and clearly identify what each deduction is and if you really want that deduction. You'll go over taxes, Social Security, insurance. Make sure you actually want those insurance policies, and if you don't, just cancel them. Over the past 2 years, I could have several $100s and bought more stock. Using my debit card for everything. I was one of those people who were very anti-debt. I did not want to go into debt at all, so I didn't pick up a credit card till very late in the game. But the issue with having only a debit card and using that for everything is that it's directly tied to your bank account. So if someone takes your money, they can swipe you clean of everything. Now, if it really is fraud, banks will help you get your money back, but it's a lengthy process because technically that money is yours and not the bank's. On the flip side, with a credit card, you know credit card companies are gonna work their butts off to get their money because it's their money, it's their credit. Until you pay it off, it is their money. I remember I actually got a text from Capital One because they told me that there was a suspicious charge on my card and they wanted me to verify it. It was actually fraud. They spent $500 on this concert ticket where I didn't even know the artist. But I was able to call Capital One, talk to them, and have them reverse the charge, and then they issued me a new credit card with a new number. And not only is a credit card the first way people start building credit, which is incredibly important if you want a mortgage or your landlord wants to do a background check. For people who are debt averse like I was previously, you can get a credit card and have the limit set to just $500. This means you can't spend over $500 until you pay it off in full. It's a good way to limit the amount of money you can spend while also building your credit score. Not having a debit card with ATM reimbursement. A lot of people know me as someone who has been cash free for the past several years. I have a phone, I only have 2 things in it, my driver's license, credit card, and that's all I carry. I thought about making a minimalist EDC or everyday carry, but that video would be super short. Welcome to my minimalist EDC. This is the only thing I carry, my phone, and in the back we got 1 credit card and my driver's license. That's it. In the past several years, the biggest time that I've had to use cash was when I was traveling overseas. Overseas, cash is still very prevalent and I needed to withdraw cash from ATMs. But what happens is that banks will charge people fees when they pull cash out of ATMs, especially in international companies. I did have to pay like $2.50 here, $5 there when I used ATMs in these other countries. The debit card I use with ATM reimbursement is a Charles Schwab debit card, and it has allowed me to go to any country, any ATM, not even networked by Charles Schwab, and pull cash from my checking account. I still do get charged, but Charles Schwab immediately reimburses it and puts money back into my account. And in the United States, you can go to any ATM from any bank and get reimbursed for pulling cash out. This is something I wish I knew sooner. not calling to erase an overdraft fee. I previously did banking with a certain company that I will not name, Bank of America, and set up a transfer from my checking account into my investment account. But during one of those days in that process, I actually paid off my credit card bill and therefore did not have enough funds in my bank account to transfer over to my investment account. And so I was hit with an overdraft fee. The amount of the overdraft fee varies from bank to bank, but it could be $35. I don't know what you think, but $35 is a lot of money. It can pay for 4 to 5 Chipotle burritos. But the thinking on my end is that it was actually my fault for not paying close attention to my funds, so I just let it be and let the $35 exit my account. A couple years later, I actually do the exact same mistake where I transfer funds over from my checking to my investments, but then I got hit with an overdraft fee. But this time, knowing more about personal finance and knowing my worth to the company, I actually called them up. And even though it was totally my mistake, I called them and explained what happened, my situation, and I mentioned that I was a valuable customer that had been banking with them for several years. And even though it was my mistake on the end, they were actually able to accommodate me and reverse the overdraft fee. Moral of the story, it doesn't hurt to ask for a fee to be reversed. The worst they can say is no, which they basically already did without you asking. And if they say yes, going grocery shopping when hungry. Honestly, I used to make the mistake all the time because when I'm hungry, I want to eat food, and so I head to the grocery store. But this is actually a bad idea because when you go grocery shopping when you're hungry, you buy more food than you originally were going to. All right, let me know in the comments if this is weird, but I actually love seeing an almost empty fridge. All right, let me just explain. Because seeing an almost empty fridge means that I have been using and eating all the foods in the refrigerator. I'm someone who hates wasting food. If I go out to eat and my friends are leaving like a bite or two on their plate, I ask to finish it. I'm a huge advocate for bulk buying and bulk cooking because I believe it saves a lot of money for a lot of people. There are certain foods such as vegetables and fruits that go bad quickly, and you don't want to overbuy these items when you go grocery shopping. Going grocery shopping when you're not hungry is the perfect time to shop. Contributing to a Roth IRA and thinking it was invested. I feel like this mistake is actually fairly common and it's such a simple one, and I'm kind of embarrassed that I went several months thinking this. If you've opened a Roth IRA, that is freaking awesome. But you do have to invest that money. You can't just contribute money into the account and think it's already invested. You actually have to pick the stocks or funds within the account to actually have your money invested into the stock market. I have a whole guide to Vanguard's Roth IRA if you want to set up a Roth IRA with them, but it goes through contributing money into the account, then actually selecting funds to invest in, and then setting up automatic contributions, investments, and dividend reinvestments. This is a simple one, but I've read stories of people opening Roth IRAs and not actually investing them for 2 years, and so they missed out 2 years of stock market growth. Thinking I was a good investor picking individual stocks in a bull market. A bull market is a time when the stock market generally goes up. We were in about a 10-year bull market before the Rona hit. And during those 10 years, any investors could have randomly picked any companies just because they felt like it and reaped rewards. Except they probably didn't realize that a majority of companies were actually increasing in stock value. So when I first began investing in individual stocks, I had this mentality that I was actually an amazing stock picker because I would look at my amount of money in my investments account and it would always go up. Except if I knew back then that the S&P 500 or a total US stock market also went up but at a faster rate, then I wouldn't have relied heavily on individual stocks. I would have taken the more diversified approach and invested in the entire stock market because that grew faster than individual stocks. Index funds or ETFs are in general a better way to invest because it's more diversified and you don't have to worry about individual companies that could go to bankruptcy. And if you buy stocks in a company that falls or goes to bankruptcy, you lose a ton of money. But with ETFs, they own hundreds, if not thousands of companies. And if one company goes to bankruptcy, it's negligible. Forgetting to cancel subscriptions. There's a period in my life when I was juggling so many different subscriptions. Netflix, Hulu, Amazon Prime, Spotify, gym membership, you name it. And initially when I first started these subscriptions, I would be using all of it. But over time, I eventually fell out of favor with certain subscriptions and didn't cancel them, but simply forgot. And so I would go a couple of months paying for these services that I weren't using until I actually checked my statements and realized that I didn't need this. I suggest doing a quick check on your credit card statements and think about if you really want these subscription services you are paying for. You can save several dollars every single month, which adds up over the course of a year. Keeping all money in a checking account. When I first started my financial journey, I created a checking account and dumped all of my money into that. And my thinking was to just have one bank account, to have all of my transactions in and out be in one place, so it was simpler. But what I didn't know at the time is that a checking account is designed for a specific reason, and it's to have money going in and out pretty frequently. But because of that, the interest rate on those checkings account are pretty low. And if you want to get serious about saving money, it's better to have a high yield savings account making 1 or 2% every single year. Way better than the 0.01% you're probably making on your checking account. If you're gonna build up an emergency fund of $1,000 or 3 months worth of living expenses, it's better to store that in a high yield savings account so you're making at least a couple tens, if not hundreds of dollars every single year to combat inflation. Leaving all of your money in a checking account with a low rate means you're actually losing money because the value of it due to inflation decreases. So don't just have a checking account, also open up a high yield savings account. Mixing business and personal purchases. This money mistake is actually a fairly recent one because although I had a lot of different businesses that I just started out of a whim, a lot of them failed until I did YouTube consistently. I am monetized on YouTube and I appreciate every single one of you for watching my videos. And so I got a business credit card and set up a business bank account. But before I got my business credit card, I used my personal card for my personal everyday spending as well as my business expenses. But it's better to separate your personal and business expenses because your business expenses can be used as deductions so you pay less taxes. Being a sole proprietor and a small business owner is totally new for me, and I will probably make tons of more mistakes in this realm, but I will learn as I go. No matter how good you are with money, there are still things you need to learn and mistakes to be made. I've had my fair share and plan on making plenty more. Hopefully little mistakes rather than expensive ones. Bop the like button because it really helps me in this channel with the YouTube algorithm, and subscribe to get better with money. Thanks for watching. I'll see you all later. Peace.